Low-cost make money cryptocurrency, a comprehensive guide. Cryptocurrency, once a niche concept, has evolved into a booming industry, drawing millions of investors and enthusiasts from around the world. While major coins like Bitcoin and Ethereum dominate the headlines, there is a growing interest in low-cost cryptocurrencies that present unique opportunities for those seeking to make money in the digital asset space. Whether you're a seasoned investor or a beginner, understanding the world of low-cost cryptocurrencies can unlock a wealth of potential. In this guide, we'll explore the concept of low-cost make-money cryptocurrencies, their potential for profit, and strategies for engaging with them in a way that maximizes your returns while managing risks. What are low-cost cryptocurrencies? Low-cost cryptocurrencies are digital assets that have a relatively low market price compared to major cryptocurrencies like Bitcoin and Ethereum. These altcoins, alternative coins, are typically more affordable to buy and can present lucrative opportunities for profit, especially in terms of percentage gains. While many low-cost coins are not yet widely known or mainstream, they can often be in their early stages of growth, offering investors the chance to get in at a much lower price point before they potentially skyrocket in value. These low-cost cryptocurrencies vary in terms of technology, purpose, and potential applications. Some are built for specific niches, while others aim to be more broadly applicable in the blockchain and crypto ecosystems. It's essential to research each coin carefully, as not all low-cost cryptocurrencies are created equal. Why low-cost cryptocurrencies are attractive for making money. Affordability and high growth potential. One of the most attractive aspects of low-cost cryptocurrencies is their affordability. Buying large quantities of these coins for a relatively small investment allows for the possibility of high returns if the coin appreciates significantly in value. If a low-cost coin experiences even a modest price increase, the percentage gain can be substantial. Diverse portfolio options. With low-cost cryptocurrencies, investors can diversify their portfolio across multiple projects. Instead of putting all funds into one expensive coin, you can spread your investment across several smaller coins. This increases the chances of benefiting from a coin that might perform well. Early entry opportunities. Many low-cost cryptocurrencies are in their early stages of development, which means they have the potential for rapid growth. Getting in early can offer massive gains if the project succeeds. Some of the biggest cryptocurrency success stories, such as Bitcoin and Ethereum, started as relatively inexpensive assets before becoming highly valuable. Volatility. While volatility is often seen as a risk, it can also be an opportunity for investors. Low-cost coins tend to have more price swings, which can create profitable trading opportunities for those who are quick to act. This volatility can be beneficial for day traders and short-term investors looking to capitalize on price fluctuations. How to make money with low-cost cryptocurrencies. Making money with low-cost cryptocurrencies requires strategy, research, and an understanding of market trends. Here are some of the best ways to maximize your potential for profit. 1. Buy and hold HODL. The buy and hold strategy, often referred to as hodling in the crypto world, involves purchasing a cryptocurrency at a low price and holding it for an extended period, hoping its value will increase over time. This strategy works particularly well with low-cost cryptocurrencies, as they may take some time to grow in value. Investors who adopt this strategy usually have a long-term vision, focusing on coins they believe have strong fundamentals and the potential for future success. While it's possible to experience significant price fluctuations in the short term, hodling allows investors to ride out market volatility and potentially profit when the market appreciates over months or years. 2. Trading for short-term gains. Cryptocurrency markets are highly volatile, making them a hotbed for short-term traders. With low-cost cryptocurrencies, small price movements can result in substantial percentage gains, which makes them attractive for day traders and swing traders. To profit from short-term trading, you'll need to stay informed about the market, use technical analysis, and time your entry and exit points carefully. Many successful traders employ strategies like moving averages, candlestick patterns, and chart indicators to make data-driven decisions about when to buy or sell. 3. Staking and yield farming. Some low-cost cryptocurrencies offer staking or yield farming opportunities, which allow holders to earn passive income from their investments. Staking involves locking up a certain amount of cryptocurrency in a wallet to help secure the network. In return, you earn rewards in the form of more coins. Yield farming, on the other hand, involves providing liquidity to decentralized finance, DeFi, protocols, which rewards you with interest or other benefits. These strategies can be an excellent way to earn additional income from low-cost coins, especially if the coins have solid staking or yield farming options available. However, it's essential to assess the risks involved, such as the potential for losing access to your coins or the risk of smart contract vulnerabilities in DeFi protocols. 4. Participating in airdrops and ICOs, initial coin offerings. Another way to make money with low-cost cryptocurrencies is by participating in airdrops or ICOs. Airdrops involve the free distribution of cryptocurrency tokens to holders of a specific coin or wallet address. ICOs, on the other hand, are a form of crowdfunding where a cryptocurrency project sells tokens to the public before the coin is officially launched. If you get in early through an airdrop or ICO, you can often acquire low-cost tokens at a bargain price. If the project is successful, the tokens may increase in value once they hit the market. 5. Mining low-cost coins. Mining is the process of using computational power to secure and validate transactions on a cryptocurrency network. Some low-cost cryptocurrencies can still be mined with relatively low resources. By mining these coins, you can earn rewards in the form of new coins, which can be sold or held for future gains. However, mining requires significant upfront investment in hardware, electricity, and maintenance, so it may not be suitable for everyone. If you choose to mine, ensure you understand the associated costs and potential rewards. Risks involved in low-cost cryptocurrencies. While there are many ways to make money with low-cost cryptocurrencies, it's important to recognize that there are risks involved. Not every low-cost coin will see significant price appreciation, and some projects may fail entirely. Here are some common risks to be aware of. Market volatility. Cryptocurrencies, especially low-cost ones, can be highly volatile. Prices can swing dramatically within short periods, leading to potential losses for those who are not prepared for sudden downturns. Scams and fraud. The cryptocurrency space is still relatively unregulated, and scams are unfortunately common. Always do your research before investing in a coin, particularly those that are low cost or new.